Welcome back to the channel. I'm Algabot, and today we're exploring an expert advisor for MetaTrader 5 called Directional Triangle Breakout. This strategy is a pure price action system built around one of the most recognizable shapes in technical analysis, the ascending and descending triangle. Unlike a symmetric coil that can resolve in either direction, a triangle carries a built-in directional lean, and reading that lean is exactly what this approach tries to do. Over the next few minutes, we'll unpack how the pattern is measured, how a trade is confirmed, and how the code brings it all together. This is educational content only, so let's get started. So what does this expert advisor actually do? At its heart, Directional Triangle Breakout is a chart pattern reader. It watches a fixed window of recent bars and tries to decide whether price is forming an ascending triangle, which leans bullish, or a descending triangle, which leans bearish. The key idea is that these two patterns are not direction neutral. An ascending triangle has a roughly flat ceiling with a rising floor underneath it, while a descending triangle has a roughly flat floor with a falling ceiling pressing down on it. That structural asymmetry is what gives the pattern its directional bias. To measure the shape objectively, the strategy fits a least squares regression line to the bar highs and another to the bar lows. The slope of each line tells it whether that boundary is flat, rising, or falling. Because raw slope values would mean different things on different symbols, both slopes are divided by the average true range. So the thresholds are expressed in ATR per bar and stay scale-free across markets and time frames. The strategy also insists that the range is genuinely narrowing. It compares the price span of the recent half of the window to the earlier half, and only continues if the recent half is materially tighter. That convergence check is what separates a real triangle from a random drift. Because it works on any single time frame you attach it to, this approach can be studied across a range of instruments and chart periods. In terms of trading style, it's a pattern and breakout method rather than a scalping or grid method. It's designed to be selective, waiting patiently for a specific shape and a confirmed break, which tends to suit traders who prefer fewer, structured setups over constant activity. Remember, all trading carries risk, and this is a framework for learning, not a recommendation. Let's walk through the exact logic step by step. On each newly completed bar, the expert advisor looks back over the number of bars set by the Lookback parameter, which defaults to 20. It collects the highs and the lows across that window and fits a least squares line through each set. The slope of the highs line and the slope of the lows line are then divided by the average true range, giving two normalized readings measured in ATR per bar. Next comes the convergence test. The strategy measures the high-to-low span of the earlier half of the window and the span of the recent half. It only proceeds if the recent half is narrower than the earlier half multiplied by the converge ratio, which defaults to 0.75. In plain terms, the range must be squeezing in. Now it classifies the shape. An ascending triangle is armed when the highs line is nearly flat, meaning its absolute slope is at or below FlatSlopeMax, while the lows line is clearly rising, at or above RiseSlopeMin. A descending triangle is the mirror image, a nearly flat lows line combined with a clearly falling highs line. The flat side defines the shelf that matters. For an ascending triangle, that shelf is the highest high in the window, the resistance. For a descending triangle, it's the lowest low, the support. Arming a side is not the same as trading it. The strategy waits for confirmation. It goes long only when an ascending pattern is armed, and a completed bar closes above resistance by BreakBuffer times ATR. It goes short only when a descending pattern is armed, and a completed bar closes below support by that same buffer. Requiring a close, rather than just a wick poke, filters out many of the false pushes through the boundary. Risk control is handled with ATR. When a long is opened, the stop is placed ATR stop multiple times ATR below entry, and the target ATR target multiple times ATR above, and the short mirrors that. With the defaults of 1.5 and 2.5, the target sits further away than the stop. On top of that, there's a fail breakout exit. If a completed bar closes back through the broken shelf by fail back multiple times ATR, the strategy treats the break as rejected and flattens the position early, rather than waiting for the full stop. Only one position per magic number is held at a time. Let's read through the MQL5 on screen as if we were in MetaEditor. At the top are the inputs. Lookback sets how many bars define the triangle. FlatSlopeMax is the ceiling on the flat side slope, and RiseSlopeMin is the floor on the converging side slope, both in ATR per bar. Converge ratio controls how much tighter the recent half must be. BreakBuffer is the confirmation distance, and failback multiple drives the failed breakout exit. The ATR period, stop multiplier, and target multiplier shape the risk, and lot sets the order size. Just below, two Boolean flags do the classification. Ascending is true when the normalized high slope, NH, is flat and the normalized low slope, NL, is at least RiseSlopeMin. Descending is the mirror, a flat low slope with a falling high slope. Now the two signal blocks. The long block fires when ascending is true, descending is not, and the just completed bar's close is above resistance plus BreakBuffer times ATR. It reads the ask price, sets the stop ATR stop multiple times ATR below, sets the target ATR target multiple times ATR above, and calls trade.buy with those levels. The short block is the exact mirror. It fires when descending is armed and the close is below support minus the buffer. Then it reads the bid, places the stop above and the target below, and calls trade.sell. Both sides confirm on a close, and both attach their stop and target at entry. Let's bring this to life on the chart, walking through a long trade and then a short trade in sequence. Look at the first several candles on the left. Price is bumping into the same overhead area again and again. That flat red line, the resistance shelf at 1.0880, marks the ceiling the strategy has fitted through the highs. Notice how each pullback stops a little higher than the last. Those higher lows trace out the gold rising lower trend line underneath. A flat ceiling with a rising floor, squeezing together, is the ascending triangle, and its convergence check is satisfied because the recent swings are tighter than the earlier ones. Because the top is flat and the lows are clearly rising, the strategy arms along. But it does nothing yet. It waits for a completed candle to close above the resistance shelf by the breakout buffer. On the sixth candle, that's exactly what happens. The candle pushes up and closes decisively above the ceiling, and you can see the buy entry marker appear right there. This is the moment the pattern resolves in the direction it was leaning. At the same time, the code places a protective stop below at 1.5 times ATR and a target above at 2.5 times ATR, so the intended reward is larger than the risk being taken. Now watch the next two candles. Price follows through, extending in the breakout direction with strong closes. It carries up into the take-profit target, and the take-profit marker prints as the position closes for a gain in this illustration. That completes the long side of the pattern, a converging shape, a confirmed close through the shelf, and a run to the ATR target. Now the market rolls over, and a different shape forms higher up. Look at the cluster of candles bouncing off the flat green line, the support shelf at 1.0900. Each rally, though, tops out a little lower than the one before. Those falling highs trace the blue falling upper trend line pressing down toward the flat floor. A flat bottom with a descending ceiling is the descending triangle, and it leans bearish. With the floor flat and the highs falling, the strategy arms a short and again waits for confirmation. On the candle marked with the sell entry, a completed bar closes below the support shelf by the breakout buffer. The floor that held so many times has finally been exceeded to the downside, and the sell marker appears. As with the long, a stop is set above the entry and a target below, both scaled by ATR. Follow the final candles down. Price accelerates lower with firm closes, reaching the downside take-profit target, where the second take-profit marker prints. That's the short side complete. And remember the safety valve we discussed. Had either breakout snapped straight back through its shelf by the failed breakout distance, the strategy would have flattened early rather than waiting for the full stop. What you've seen here is the whole idea in two trades, a directional triangle identified by its slopes, a confirmed close through the flat boundary, and a defined ATR-based exit on each side. Charts like this are simplified for teaching, and real markets produce plenty of breaks that fail. That brings us to the end of our look at directional triangle breakout. We covered how the strategy measures ascending and descending triangles using regression slopes of the highs and lows, how it normalizes those slopes by ATR and checks for a converging range, and how it only acts on a confirmed close beyond the flat shelf. We also walked through the ATR stop, the ATR target, and the failed breakout exit that steps aside when a break is rejected. Everything here is for educational purposes only and is not financial advice, a recommendation, or a solicitation to trade. If you found this analysis helpful, please like the video, subscribe for more MetaTrader 5 strategy breakdowns, and leave a comment with the pattern you'd like us to study next. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.